Hello everyone, my name is Rainer and welcome back. So if you have been following me for quite a while now, I would like to actually say thank you for your continuous support because your support is what makes me do these videos each and every week. And for those of you who are actually new to what I do, basically I'm a trend follower. So I identify trending opportunities in the market. I'll talk about trade reviews and trade management, psychology, and much more on a weekly basis. So that's the reason for my weekly videos that I put out. Hopefully that you guys can actually profit from my mistakes and my experience. So with that, this week I look to cover two things. The first thing that I look to cover is to tell you about why 95% of traders fail to do this particular one thing. And the next thing I like to cover is actually a potential setup that's forming up on crude oil. So with that, let's look at the charts of the dollar yen and begin. So this is the chart of the dollar yen, and as if you know, I'm actually bullish on the dollar for quite a while now. If you've been following me for the last few months, I've actually been bullish and looking to buy the dollar, and I've actually scaled up quite a bit on the dollar yen. So this is the chart of the dollar yen, the forward chart, and clearly you can see the price is in a uptrend. You can see price forming higher lows over here, over here, over here, over here, over here, and over here. So no doubt that the trend is strong and price is still looking to hit higher. But the funny thing is, 95% of traders, that's right, 95% of traders fail to do this one thing. And what is this one thing? I'll give you some time, about 5 to 10 seconds, and think about it, that what this 95% of traders fail to do. So if you thought about it, and here's what it is. 95% of traders fail to long this market. That's right, they fail to go long on this market. So now the next question is, why? Why is that? I mean, the trend is clear, price is, so bullish, higher highs and higher lows. What traditional technical analysis is telling us, to go long, but still traders fail to go long on this market. Why is that? And here's why. I'll look in to plug in this indicator called the RSI indicator. It tells you whether price is overbought and oversold, and it's actually used by many traders around the world. So usually when price is above 70, they conclude that price is overbought, and when RSI is above 70, they will say price is overbought, and similarly if RSI is below 30, price is oversold. So looking at this indicator, I've actually demarcated where price is overbought between these two red lines over here and here. So you can see that this entire region over here, okay, price is overbought. So if you're one of those traders who use the RSI and you look at the chart and say, oh, price is overbought, I wouldn't want to buy because it's so expensive right now, price is going to reverse, going to retrace. I'll look for those retracement before I enter a trade once more. And if you are thinking along these lines, you would miss this entire 700 pips move. Right? You miss the entire 700 pips move because the RSI indicator is telling you this move is overbought. So I repeat once more, you miss this entire 700 pips move because the RSI indicator is telling you it's overbought. Now does that make sense to you? Basing your trade ideas on a particular indicator, it causes you to miss this 700 pip move. If you don't believe me, let's look at another chart. Let's look at the euro dollar. Again, I'll plug in the RSI indicator, and the two red lines demarcate where the market is oversold. So it's oversold here. This entire region oversold. So once more, if you look at the indicator and say, look, the RSI is oversold, and I'm not looking to short this market. And if you had that thought, you will miss another 750 pips move on the euro dollar. Now, there is a lesson I'm trying to put across down here. A very important one, that is. And what is that? And right now, okay, if you have your pen and paper, I hope you actually write this down, alright? So, basically, the lesson is this. We as traders, it is not our duty to predict what is high or low. but rather to trade what it shows. I'll repeat that one more time. It is our duty not to predict what is high or low, but rather to trade what it shows. So basically, what I'm trying to say is that don't predict what is high or low. Don't say that the price is too high, cannot go any higher, or it's so low, it cannot go any lower. Because we are not in this business to predict, but rather we are in this business to simply trade what the chart shows. If the chart is showing you higher high, higher lows, look to long. If the chart like this euro dollar is forming lower lows and lower highs, look to short. That's it. That's our duty as a trader. Simply that. Do not plot in these unnecessary indicators that tell you what price is, whether it's overbought or oversold, because I've just clearly showed you two examples that they are misleading and they are harmful for your trading. So I'll repeat this important message one more time. It is not our duty to predict what is high or low, but rather to trade what it shows. So this message is the important message that I have to get across to you guys. And 95% of traders actually failed to do this thing. They fail to buy when price is in an uptrend because it's too high, and they also fail to sell when price is heading lower because they feel it's oversold. So yep, that's the important message I have for this week. And the next thing I look to cover is actually, like I mentioned earlier, the setup on crude oil. So let's look at crude oil. So this is the chart of crude oil. So we look at the monthly chart of crude oil, and you can see that. Okay, let's ease up a little bit. Okay, I think there's some you guys actually feeling very tense right now. So take a breather and take this 10-second break and actually to recollect what I said earlier, and get ready for my next little bit of presentation. All right. Okay, so welcome back. So this is the monthly chart of crude oil, and you can see that price took out this important level, this 89 level over here. So you can see that on the monthly chart, price is actually lower over the last 5 months. One candle, second candle, third candle, fourth candle, and fifth candle. So over the last 5 months, crude oil has been falling, I would say, pretty drastically. It had a high over here of 130, and today is trading around $79, $80. So the slide down here was pretty intense, right? The slide from 120 to 80 over here is quite intense, and I'm still actually looking to short this product, and I'm actually short right now. So if you look at my this website, I mentioned that on daily we notice that price tends to bounce off the 20 EMA. Traders can consider shorting on pullback or look to trade breakout to the downside. So with that, let's look at the charts, and you can see on a weekly chart, on a daily chart. Okay, so let's do on a daily chart. I plot in my two moving averages, the 20 and the 50. So as what I mentioned earlier on my site, price tends to respect the 20 EMA. You can see here, over here, here, and the last recent one was over here. So notice that for crude oil daily chart, 20 EMA is providing a very good resistance, and it should price retrace higher towards the EMA. Traders can actually look to short this move. Or similarly, another potential scenario would be for crude oil to actually consolidate down here before breaking down lower towards the downside. So two potential setups and two scenarios that could occur for crude oil. And I think I'm short somewhere since $96, and I'm looking to scale in this move should the opportunity arise. So stop loss, I typically use about 2 ATR for crude oil, and it's sufficient for me to actually ride out the volatility and hopefully to to capture further move towards the downside for crude oil. So this is the only setup that I wish to share with you guys this week. I mean, there are more setups, but I think crude oil is actually the more prominent one, the more obvious trend to trade. And if there's any updates, you can go to my site, and I'll probably update on a particular weekday, perhaps on Wednesday, and to showcase and share with you what else I'm looking at. So with that, that's all I have for you guys this week on my weekly market analysis. I know the first half was pretty intense because I felt that the message had to be kept through to you guys in a very clear and direct manner, because that's what I feel that hinders a lot of traders out there. And I hope you guys actually do find it useful. You guys enjoyed it, and no offense to any traders who use indicators out there, because I do not mean to put you guys down, but rather to show you the right side, the profitable side towards trading. So with that, I wish you guys good luck and good trading. If there's anything, feel free to drop me an email, and I'll talk to you guys soon. All right? So thank you.